This is going to be a slightly longish video, and I occasionally keep doing this. The question is, should you invest in direct equities when you're already a mutual fund investor, or should you invest in mutual funds if you're already an equity investor? I've always found this very difficult to answer because I do believe that when you're investing, there are certain things which you should have, which people just skip those actions and they just get into investing. So first of all, you should have an investment philosophy statement. So if you are a 32-year-old who is trying to save for his or her retirement, then you have another 28 years to go when you will finally retire. At 45, you may retire and do some other business or things like that. At 65 or something, you'll say, now I can't do any activity on a regular commercial basis, so therefore I'm retiring. So you have a longish runway in which you're investing. So then that answer is going to be very different from a 60-year-old who's just retired and said, oh, I have retired and I have some money, should I be buying shares or should I be investing in mutual funds? Maybe the answer for him is neither. You should go to an investment advisor and ask him what to do. So now I'm not getting into whether you should get into an investment advisor or no. I'm assuming that either you go through an investment advisor or do it yourself. But you should at least have an investment philosophy statement to know why you're making each of those investments. Why are you buying gold? Why are you buying real estate? Why are you buying, let's say, Fortis Hospital or Kotak Bank or something like that? Why are you doing it? If you don't even know why you're doing it, you shouldn't be doing it. Secondly, if you are an investor anyway in mutual funds, you should buy those shares which a mutual fund can't buy. What is the point in indexing and then buying HDFC and TCS and Kotak Bank and Asian Paints? Doesn't make any sense, because there is congruence of strategy. What the fund manager is doing, exactly what you're doing. In fact, what you're doing is you're changing the weights of the index, and therefore your overall return between your portfolio and your index will definitely be less than the index over a long period of time, because you don't even know what weightage to get. Luckily, if you got the weightage right, at one point in time it will look like you're outperforming, but the minute that strategy fails, because you don't have a strategy which changes, so you will continue to be overweight on BFSI or technology or pharma, and the index itself would have changed the weightage. So index would be giving you, sometimes it would be giving you superior returns and sometimes inferior returns, but overall you're not adding any value. However, if you think you can add value by trading, let's say you trade in TCS, HDFC Limited and ICICI Bank, you trade, you buy and sell those shares, then it's different. You are, at least there is no congruence of strategy and portfolio. So if you want to trade in those shares, then be my guest, you can buy, sell, do whatever you want, right, wrong, whatever, but at least there is change in strategy. If you do a index investing SIP and a buy and hold in your portfolio which is duplicating the index, right, largely if it is duplicating the index because that is what you understand, you're not adding any value at all. There I would suggest, especially if you have money and you have, let's say you have a 5 crore, 7 crore portfolio and you have 50 lakhs spare for doing this, then at least pick up those shares which will never reach the index. For example, LMW or Procter and Gamble or a Nestle. Right, so these shares are very difficult. I mean, or shares which will, or DMart or Supermart. I don't have DMart. All the other shares I have. Some of these shares you pick up saying, okay, it will never reach the index. The management does not want it to reach the index, so therefore let me buy these shares. Buying shares outside of the index, which means a Bosch or MRF or those things, makes sense for you because you can buy, hold, because again the strategy doesn't matter. You can have the same strategy for your index funds. You will do an SIP, or in these shares which you will buy and hold, right, because these are not similar, these are not there is no congruence. So either the strategy has to be different or the portfolio has to be different, or both equity, the strategy and the portfolio can be different. So unless you're going to do some of this, it does not make sense. So if you buy a share and you say, okay, I'm going to hold this for till I get 20% return, that's fine, which means you should have a very clear stop loss saying, okay, over 3 years, if this share doesn't do anything, I'll sell it off. My criteria is I want a 20% return, but if I get only 12% return and the index is at 12%, which is my other investment, then I will hold on to this, because at 12% in the index and 12% in my portfolio, I'm not so badly off. Or if I'm getting 18% on my portfolio and 14% on the index, then again I'm better off, right? So in such cases, so which means you have to invest in shares which are not there in the index, or you have to have a completely different strategy, right? You have to have a, like you say, in my investments in mutual funds or in index funds, I will be a buy and hold person, but here I will trade, right? So some of that you can do. You can have a completely contrarian view here, and you can have a, there you are a long-term investor, which means you are always permanently bullish, whereas here you can say, oh, I'm worried about the election, so I will not hold a position, I'll move to cash, then I will move in, I'll move out, I think this government will not do anything about PSU, let me sell PSU. You use all your brain, all your strategy in that 50 lakh portfolio, whereas your 2.5 crores or 3 crores in the index funds is doing well. Why is it difficult to invest in directly or even through mutual funds? Is one, the minute you have an investment proposal, you're supposed to scan it across all other investment opportunities. So if I tell you that I think Fortis Hospital is a good buy, you have, and you're going to put say 2 crores into it, okay? Why I'm picking up 2 crores is, you also have to consider, is it worth putting 2 crore in a bond fund? Is it worth putting 2 crore in a gilt fund? Is it worth putting 2 crore in a flat? Because I'm going to hold it for 5 years. Am I going to, how am I going to get the benefit? Am I going to build my position slowly and exit slowly? If you're going to do that, then real estate is out. That's why I'm saying, so you have to compare it to all the possible potential opportunity costs which are there at that point in time. None of us will do this. Now take a eating example. So you were sitting in a hotel where there is an amazing range of food. Let's say you're in Hyatt. And you have 140 items. You still go and pick 1 or 2 items which you like. Last time I went, my host asked me, how did you like the spread? I had eaten only 2 items, right? And I had a coffee. So that's all I had. So there can be a big spread, but you are going to buy just these 2 things. So knowing what to buy is not going to be very easy. So that disciplined approach of being able to compare all the opportunity costs at that point in time is not going to be very that's not going to be very easy. Then the fact that you are disciplined enough as an investor, we don't know whether you are disciplined enough as an investor. So what happens, the discipline should be such that it becomes a habit, right? You get up in the morning, make your bed, you then go and brush your teeth, then you have breakfast, and you don't say, I'm extremely disciplined, I made my bed, I brushed my teeth. It has become a habit, right? So before going to bed or and while getting up in the morning, the first thing you do, the first thing that I do is normally brush my teeth. So it's not a matter of discipline, it's a matter of habit. It's been, I'm sure I was unwilling to brush my teeth when I was a 2-year-old. My mother had to pull me out and brush my teeth. All that had to happen. But today, if my mother were to say, oh, it's all a big mistake, you don't have to brush your teeth, I'm going to call up my sister and say, look, something is wrong, she's lost it, right? So it's become such a strong habit that there is no chance of me giving that up as long as I'm in my senses. So that discipline to build in, which means, right, I said, creating a philosophy statement and maintaining a diary, saying why you're investing, what you're investing, what are the opportunity costs which you measure it again. You need to do all this before you buy that bloody share, right? It's not going to be very easy. It's like standing at in a restaurant with so many items and saying, oh, my doctor has told me I have to only eat these, right? It's very difficult when there are more tempting options available. If you're at home and that's the only thing available, it's different. So if you're anyway only in an index fund, it's different. But when you have such a huge range, you're like a kid in a candy shop wondering what to buy. It's very difficult to say don't buy any candy. So having only idli does not seem to be a great option for you, right? So you have to constantly keep learning, because I don't understand anything about these new companies like Nykaa or Zomato or Paytm. I do think that getting yourself listed before you start making money is wrong, because you can never ever raise money at a price different from the listed price. So whether it's a Nykaa or a Paytm or Zomato, they cannot now raise money in the market at those inflated values which they thought they deserved, like 2150 for Paytm. If it is quoting today at $700 and heading down, how are you ever going to raise money at 2,150, right? Whether you deserve it or no is different, but anyway, I don't understand it, and I don't want to try to understand the valuation. So I looked at Damodaran doing the valuation of Zomato. I think he arrived at 47. So I said, I will not wait till 47, I'll buy at 75. And that 75, which was the issue price, I'm a buyer at that price. I bought it also at 90 bucks. But I will not continuously buy. Now I'll wait for Damodaran's price of 47 if I have to buy again, right? So never stop learning and see whether you want to keep learning. If I don't want to keep learning, I should not be investing. What happens if what happens to the diary that you write? The diary that you write tells you the mistakes that you make, the right things that you did, and the logic for it. In many times when you write down the logic, like Ramdev Agarwal's famous example, he bought Eicher Motors for the trucks that they make, but he made money because of the motorcycle that they were manufacturing. I think it's a fantastic example of saying how you can go right, how your strategy can be wrong when you still make money, because other things also happen. Sometimes your strategy is right and you lose money. Sometimes your strategy is wrong but you make money, right? So both these things can happen. Be ready for such dramatic changes which happen in real life while investing, right? Also, I do think that if you are a full-time employee and trying to invest on your own, you're much better off investing in index funds, or maybe if you think you fancy your skills that you can pick up the right funds, then maybe you will make money. But I doubt whether that kind of discipline you will have. Don't look at a big investor and say he is doing this. He is only telling you the success stories. I am not telling you about my failures. I am not telling you about my mistakes. I occasionally do, but it does not really help you much, right? So don't get carried away by the things which older people who have done it in the past. If I myself were to start from zero today, I don't know whether I would have done as well as I have done, and if this can be called doing well, right? So there is my inherited portfolio, my created portfolio, my traded portfolio, my investment portfolio, right? So preserving them, growing that, all that I have done. I don't know whether the same strategies will work because I don't even know what was the strategy. The strategy is not written down very beautifully to be able to tell you. I can only tell you broadly what happened, but transaction to transaction, I don't have the discipline of maintaining records. So again, all that is lost to noise. Thank you. I hope it was not too much of a rant. 12 and a half minutes is a little difficult, but I hope you enjoy it. Thank you.